Good afternoon. Tonight, after the close, the artificial intelligence trade takes its first real exam. Alphabet and Tesla report earnings, the first two of the giant technology names to show a quarter, and the number that moves everything is not revenue and it is not profit. It is a spending line. Meanwhile, oil jumped about 5% today to $95.47 because Washington talked down the chances of peace. A report card on one side of the market, a war bid on the other. Let's take it in order. Here's the board at midday, and note that every one of these numbers is provisional until tonight's earnings calls. The S&P 500 is roughly flat near 7,440. The Nasdaq is off about 0.4% around 25,400 because the semiconductor complex that led yesterday's rally faded this morning. Intel down over 2.5% before the open, Advanced Micro and Micron down around 2. Nvidia off about 1. The Dow is up about 0.3. Now the other tape. Brent crude at $95.47, up around 5% in a single session. Gold near $4,150 an ounce, its highest level since early July, bid on conflict risk and positioning ahead of next week's Federal Reserve meeting. Bitcoin near 66,000 after touching 67, its best area in about a month. And the 10-year Treasury yield at about 4.63%, grinding higher, which is the wrong direction for everything long duration in the index. One note of discipline, no reliable same-day print on the volatility index, so I am flagging it rather than guessing. Signature segment, consensus versus the read. First, the consensus treats tonight's Alphabet report as an earnings event. Analysts expect roughly $101 billion of revenue and about $2.10 of earnings per share. The tell says almost nobody will trade those numbers because tonight is a capital spending referendum. Alphabet raised its full-year spending plan to between $180 and $190 billion last quarter. Told investors 2027 rises from there and raised $80 billion of equity to help fund it. The quarter's expected spend alone is about $45 billion. Here's the mechanism. The entire artificial intelligence complex, the chips that faded this morning included prices off whether that commitment holds and whether management can show it earning. A profit beat with a spending trim reads as the bear's vindication. A profit miss with a confident raise reads as the compute-scarcity story confirmed. High conviction the market reacts to the guide, not the print. Second, the consensus says oil at $95 proves the war trade was right. The tell says the asymmetry just got wider, not safer. Look at what actually moved the price 5% today. United States officials talked down the prospect of new peace talks after an 11th straight night of strikes, and at least one Saudi crude tanker reversed course on the Red Sea threat. Words and one ship. Physical flows barely changed. A market that jumps 5% on discouraging language about diplomacy will hand it all back on encouraging language, and the truce proposal that includes relief on the Strait of Hormuz is still on the table. The crowd that was long at 90 is longer at 95, and the exit is exactly as narrow as it was on Monday. High conviction on two-sided risk, no view on timing. Third, the consensus heard the Treasury Secretary say the Clarity Act is at the 1-yard line and concluded the crypto bill is effectively passed. Bitcoin popped towards 67,000 on it, and the big conditional price targets, CT at 143,000, Standard Chartered at 150, got recirculated everywhere. The tell says the last yard is the political one. Every one of those targets is contingent on passage, and the passage math is unchanged. 60 votes needed, 53 Republican seats, so 7 Democrats have to cross over, and as of midday no cloture motion has been filed, and Democrats still have not seen the ethics text they are being asked to vote on. The recess begins around August the 7th. Our tripwire from yesterday stands. No cloture filing by July 24th, and this slips past the break. Bitcoin at 66,000 is pricing the touchdown while the ball is still on the field. Follow the money. The regime is unchanged, but the temperature is up. An energy-led inflation risk is pressing against an equity market led by artificial intelligence capital spending, and the 10-year yield at 4.63% is the transmission line between them. Start with oil, because today's move was a language event, not a supply event. The premium is built on words, which means it can be built up or torn down by words. in either direction. Gold near 4,150 is the defensive expression of the same trade, still capped by real yields in the mid-fours. And rates are the quiet actor in tonight's main event too. The more expensive money gets, the higher the bar for $185 billion a year spending program to prove it is investment rather than habit. Washington adds one more variable. The United States Trade Representative signaled a fresh round of tariffs on dozens of countries. Inflationary at the margin, and one more reason next week's Federal Reserve meeting is live for the tape, even if it is not live for a rate cut. And the capital cycle itself faces two referendums on one tape tonight. Alphabet's we covered, Tesla's is subtler and just as interesting. The company delivered a record 480,126 vehicles last quarter, and the consensus story is a victory lap. But Tesla is spending roughly $25 billion this year as it pivots the story from cars toward automation and robotics. That is not a car company's budget. So the same question lands on both calls within the same hour. Not, did you make money last quarter, but is the enormous bet you are making with shareholders' capital starting to pay? For a year, the market has taken yes on faith. Tonight, it asks for evidence in public for the first time. The sentiment beat. Across market and social sentiment monitoring, the commentary layer remains structurally bearish on artificial intelligence. The fashionable observation today is that a violent unwind in artificial intelligence trades is hiding beneath a resilient-looking index, and retail sentiment gauges on the chip names have cooled from bullish to neutral ahead of the earnings. The tape tells a subtler story. The index is flat, not falling. The chips faded. But they faded on nerves, not on news, because there was no news. Everyone, bull and bear, is waiting for the same two conference calls. When positioning and commentary both go quiet before a known event, that is not conviction on either side. That is a market holding its breath. The most honest data point on the board this week is not a forecast. It is arithmetic in a filing. SpaceX has scheduled its first earnings report ever for August the 4th. 2 days later, on August the 6th, around 911 million insider shares, worth roughly $116 billion, begin unlocking. By year-end, the tradable share count goes from 639 million to 5.33 billion. That is more than a seven-fold increase in supply, and the stock has already traded below its offering price before a single locked-up share has moved. The most celebrated private company of its generation still obeys the oldest rule in markets. Price is set by the marginal seller, and until now, the marginal seller was not allowed to exist. Sectors in play, semiconductors. The bull case is yesterday's rebound on real capital commitments. The bear case is this morning's fade, and the fact that one soft spending guide tonight validates every seller. The read is that the verdict arrives at 4:30 Eastern, and positioning ahead of it is a coin flip with leverage attached. Energy. The bull case is a $95 handle, an 11th night of strikes, and tankers rerouting. The bear case is that the entire premium is denominated in headlines. The read is unchanged from yesterday, just $5 higher. Highest variance sector on the board in both directions, and position size remains the whole decision. And crypto. The bull case is that a one-yard line declaration from the Treasury Secretary is about as strong as official signaling gets. The bear case is 7 votes, an unseen text, and a 2-day fuse. The read is that $66,000 Bitcoin is an option on a Senate calendar. On the radar, tonight at 4:30 Eastern, the Alphabet call with Tesla the same evening. The guides, not the prints. Thursday, Intel reports the second chip verdict in 24 hours. July 24th, I'll clutch a tripwire on the Clarity Act. No filing by then, and the bill likely waits until autumn. This week, the planned Starship flight, a reach event for the SpaceX story running head-on into the August supply cliff. July 27th, China's Kimi K3 model publishes its open weights, and the compute scarcity thesis becomes independently testable. Next week, the Federal Reserve meets, with oil at 95 and tariffs reloading. And the 4th and 6th of August, SpaceX's first earnings, then $116 billion of supply, meets its first public test. The scorecard, 2 new falsifiable calls, dated today. 1. Alphabet does not cut its full-year capital spending guidance tonight. The $180 to $190 billion range is held or raised. falsified by an announced reduction. 2. The SpaceX trigger clause does not activate. The stock does not print $175.50 on 5 of the 10 sessions before earnings, and the conditional tranche of 455 million additional shares stays locked, falsified if the trigger fires, and grading what's open. The oil call from yesterday that the asymmetry is to the downside if a ceasefire lands is stressed but intact because the condition has not triggered. The compute-over capability call gets its first discrete test literally tonight, and the clarity call has 2 days left on its fuse. And the question worth sitting with tonight is this: what happens to a market that has priced the artificial intelligence build-out as inevitable, the first time a company spending $185 billion a year is asked, on tape, whether it is paying off yet? Not yet is a perfectly reasonable answer for a build-out of this size. It is also, at these valuations, the most expensive sentence in markets. We find out at 4:30. Frankie's deep dive today is the SpaceX unlocking on the channel now. This is Earl, the asymmetric signal, one contrarian read a day. Subscribe.